Good morning, good afternoon, good evening, whatever your time zone is. You're all welcome to Portfolio Boost. My name is Anita Eduardo, and I'm the host of this show. Today, we're going to be looking at a very, very insightful topic that a lot of traders ignore. And the truth is that if you ignore this thing that I'm about to share with you today, it can actually cost you a lot. And if you're not careful, it can even lead to depression. And I'm not talking those shallow depression that, does not really cut deep. I'm talking about serious depression where you will not feel like doing anything. I mean, you just feel like your whole world has crumbled, right? So, today we're going to be looking at revenge trading. Now, very simply, revenge trading is just is an emotional reaction that you display when you try to get back at the market after a loss. So basically, after a loss, you start to place aggressive trades because you just want to get your money back, right? You just want to get your money back. So you start to fight with the market. But the truth is, trading is not you versus the market, or trading or you versus whales, or you versus the person that gave you the signal, right? Trading is you versus you. I mean, trading is a very beautiful business that sort of like holds a mirror to you, and then it shows you your shortcomings. So if you are a very impatient person, if you're not a patient person, trading shows you who you are, right? If you are a greedy person, trading shows you who you are. If you are hot-tempered, trading shows you who you are. So now it's not left for you. If you want to be profitable, if you want to make profits, if you want to move, if you want to go far in this trading business, you need to ensure that you work on these shortcomings that the market is pointing out to you, because that is the only way you can make money, right? That is the only way you can make money. Now, revenge trading is just basically about getting an emotional reaction, as in it's sort of like an emotional reaction whereby you try to get back at the market after a loss, by placing aggressive trades, as in you want to get your money back by all means. Let's say, for instance, you were trading Doge and then you lost money, and then you're like, oh, since Doge is not giving me money, let me go to Solana and see if Solana will show me love. So you try to trade, you trade Solana. Now you are trading all these things without a strategy. In fact, that in itself is gambling, right? That's gambling. When you are placing trades without doing any analysis, you're not doing any fundamental analysis, you're not doing any technical analysis, you're not doing any sentimental analysis, you are gambling. Okay. So now revenge trading is just all about, is an emotional reaction that you have when you lose, because you want to get back your money by all means. And this thing usually leads to bigger losses, because the more you try to revenge, because the market does not have your time. The market is not fighting with you, right? The market is not fighting with you. The market is only giving you an outcome of what you have inside of you. That's just it. So that's why, as a trader, you need to make sure that you nurture your mind, you protect your mind, you exercise your mind. Because if you don't, I mean, it could get so bad that you can't even run mad, because this is a very serious business. It's a very serious business that has to do with numbers. So you have to work on your mind. You have to make sure that you nurture your mind, you protect your mind, you exercise your mind. Now, when you do this regularly, you're not going to be falling prey to unmanageable losses, because your mind is already in a good state. Now, every morning before you trade, it's very important that you carry out some exercises, some mind exercises, because if you don't, it's going to affect your trading one way or the other. All right. So now, what are the signs that you are into revenge trading? What are the signs that you're guilty of revenge trading? Number one is you rush into trades after a loss. So ask yourself, now I'm not saying you should tell me the answer, but ask yourself, after a trade, do you start to find ways on how to get your money back? Do you pause? Do you take a break? Do you even journal your trades? That's one question you should ask yourself. Do you journal your trades? Do you take out time to find out? Now, when you lose money, do you take out time to find out, oh, why did I lose this money? What did I do wrong? Is it that my technical analysis was wrong? Is it that I got in too early? Is it that there's a particular time I'm supposed to get into the market and I missed that time? You have to ask yourself these questions, right? So that's the first thing. That's the first sign that you're guilty of revenge trading, when you rush into trades after a loss. So let's say, for example, now you lost money while trading SRP. The next thing you're doing, you're jumping into Doge, and then you see a signal somewhere on what kind of like now grass. You see a signal on grass and you quickly jump into grass. Now what you're doing is you're gambling. That's just it. You're gambling, and it's only a matter of time before you fall prey to that dangerous thing called revenge trading. So that's number one. And number two is you increase your position size recklessly. Now that in itself is one very, very dangerous thing that no trader should do. Okay. So now let's assume that your stop loss was 3%. And then because the market looks like, oh, it's going to pump later. So what do? That 3%, now you now increase it to 5%. And then maybe the market is coming close to your stop loss. What do? You now increase it again. I mean, that is a very reckless behavior, and it's going to get you into trouble. It's going to make your portfolio bleed if you're not careful. Okay, so that's number two sign. Now there are lots of signs, but because of time, I just outlined these few ones, right? So the third one is ignoring your strategy. So let's say your strategy tells you that you're to only trade in the mornings, or you're to trade only in the afternoons or in the evenings. But because you see one beautiful signal somewhere, or maybe you feel, oh, the market is going to move, or your mind tells you that the market is going to move. Let's say you were supposed to trade in the afternoon, just afternoon. So that's what you told yourself. You now decide to say, oh, in fact, let me trade in the morning. Or let's say, for example, now your strategy is the stochastic RSI. Now the stochastic RSI is telling you to buy, and you're saying, no, I want to sell because I saw some signal somewhere, or some influencer somewhere said the market is going to dump, so I want to sell. As in, when you go against your strategy, it's only a matter of time before you fall into revenge. As in, this is one of the signs, right? This is one of the signs that you're guilty of revenge trading. If you cannot follow your strategy, if you don't know how to shut out the noise. Now, noise can come in form of influencers. It can come in form of the influencers, or other crypto tutors. It could come in form of anything, right? So if you don't shut out the noise, and you keep letting this noise affect your strategy, it's going to lead you into revenge trading, right? Just know your strategy. For example, my strategy is mostly price action. And that is why I always take out time to teach that topic to my students. Why? Because without price action, there is no way you will be a good analyst or a good trader. I mean, take for example, last year, the reason so many people are consistent on this, or rather, the reason quite a number of persons are consistent on this show, is because my analysis, they always play out. For example, if I tell you now, just a few months ago, I was telling you guys, I said BTC is going to hit 117K. When I was saying it, I sounded stupid. A lot of persons even left the channel because they felt I was saying rubbish. Other influencers, they were saying, oh, BTC is going to dump. I said, no, BTC is going to get to 117K. And I came here on this show, I said this several times, just as how I told you guys last year that, oh, BTC is forming a bullish flag. It's going to get to, I think it was 91,000 or so that I said. I can't really remember the exact figure, but I said it on this show so many times last year. And a lot of people that are listening, they made money. Now, so what am I trying to say? I'm just saying that I have a strategy, so I stick with my strategy. No matter what my colleagues in Bybit say, no matter what anybody says, I stick to my strategy because I know that my strategy always works. So stick to your strategy. When you don't stick to your strategy and you start listening to noise, you are guilty of revenge trading, my dear. You are guilty. You are guilty of revenge trading. So the last one is trading with anger or frustration. That is also another sign that you are as if you are guilty of revenge trading. So let's say you lose and then you get so angry, you just get into your room, you scatter everything, you bang the door, as in you are frustrated, you are livid, you are so angry. That is a sign that you're guilty of revenge trading. So you need to fix that. All right. So now, how do you avoid revenge trading? It's very easy. The first thing you do is pause after every loss. And this is why it's important to journal your trades, right? Journal your trades. So pause after every loss. Find out, okay, why did I lose? What did I do wrong? Is it that I did not follow my strategy? Is it that I traded at the wrong time? Is it that I allowed external factors to influence my trading? These are the questions you should ask yourself. So these are the questions you should ask yourself, and that will protect you from falling into that trap, that deadly trap called revenge trading. So the first thing you do is you pause after every loss, assess why you lost, and then figure out how you can fix that. Okay, so that's number one. And number two, stick to your plan. Don't listen to any, don't, if you have a plan, stick to it. Now, if you told yourself, oh, when SRP gets to $14, now, by the way, SRP is going to get to $14. When I was saying it last year, so many people didn't, it's just a few persons, especially those that attended that are regulars in this show. They're the ones that took it seriously, and most of them, they made money. So I'm telling you again, SRP is most likely going to get to $14, right? So now, stick to your plan. So let's say, for instance, you tell yourself, oh, I'm going to buy SRP at $3 and I'm going to sell when it gets to $14. Stick to that plan. All right. When it gets to $14, don't say, SRP has gone to $14. Maybe it can get to 21. Let me just wait. Now, most times that is where people get to lose money, because now you're not even using strategy. You are not relying on luck that since it got to $14, maybe the luck that brought me this far, maybe to take me further, so let me hold it. No, don't do that. If you do that, you end up losing your money. All right, so that's number three. So that's number two. Stick to your plan. And number three, use a loss limit. Stop loss is your best friend. I mean, stop loss is just the market. As in, stop loss is just basically telling you, take risks. I'll be here to catch you. So use stop loss every time. Don't trade without. In fact, it's very risky. And people that don't trade with stop loss, I see them as proud, because you are trying to say, oh, you will be correct all the time. No. In case you're not correct, in case maybe anything goes wrong, put your stop loss. Always use your stop loss so that you can protect your capital, or you can protect your accounts from getting blown. All right, so that's number three. Then number four, journal your emotions. What led to this trade? Why did I lose this trade? Why did I lose this trade? What made me enter this trade? So you journal your emotions, right? Journal everything. Write down every reason. Okay, write down every reason for the trade. What was the emotion behind it? Were you allowing external factors to come in, or is this just purely technical analysis? So write down the emotion that was going through you, as you took the trade. So last one is accept losses. Now, losses are normal. In fact, as a trader, the first thing you should learn how to do is you need to learn how to lose. Become a professional, learn how to lose. Now, I'm not saying, okay, now this is one very broad topic. I don't want to dive into it, because if I do, this recording will be too long and we might not leave here today. But what I'm just trying to say in essence is accept losses, okay? Losses are normal in trading. They are normal. And losses are not there to tell you that, oh, you are a failure or you don't know what you're doing. No, losses are there to guide you, they are there to guide you, and they are there to reprogram you to help you get into to help you fall into line, to help you get started in the right direction. So losses are meant to teach you, not break you. Let me just put it that way. Losses are meant to teach you, not break you. So don't see losses as something that means you're a failure or something. No, losses are meant to build you. Now, if you lose, when you start to lose, and then you don't know why you are losing, or you are not taking lessons, that is when it becomes a problem. So as you're losing, start journaling. Okay, why did I lose? What made me lose? Write everything down. This is why journaling is very, very important. As in, journaling is too important, please, when it comes to taking accountability and, getting out of that dangerous zone called revenge trading. So, now, how do you protect your mind when from trading? From revenge trading. How do you protect your mind? What do you do? Now, the very first thing you should do, right, when you find out that you're guilty of revenge trading is, number one, after every loss, pause, breathe. Okay, pause, breathe, then regain clarity, because the pain of loss is very terrible, though. It's very terrible. So you have to first of all find out, okay, as in, you have to pause first. Pause, breathe. Don't do anything. Don't take any action. Just breathe. Then regain clarity. Because sometimes when you lose, especially when you lose and you were right, that thing can be very painful, as in it can cause anybody to lose it, as in to lose their mind. So you pause, regain clarity. And if you're a Christian, you can speak in tongues, let the Holy Spirit guide you and lead you and tell you what to do. Okay, so that's number one. Then number two, don't chase. Okay. Don't chase. When you chase, and it just has this way of affecting your mind. Don't chase any trade. For example, if you saw that, okay, a signal or magic was given, but you were not privileged to enter on time and it's now pumping, leave it, let it go. Okay, so that's number two. And number three, understand that the market owes you nothing. Okay, the market owes you nothing. The market actually rewards you for being right or for being wrong. It owes you nothing. Is when you take action, that's when the market actually rewards you. So that's number four in terms of mindset tips. And number five, sorry, that's number three. Number four, trade with calmness. Be calm. That's why you should take some psychocybernetic exercises when you before you start trading. Take some mind exercises so that it can calm your mind down. I mean, trading from that point of clarity, from that point of calmness, it will do you a whole lot of good. All right. So now, before you take any trade, ask yourself, am I calm? Was this my setup or is this another person's setup? That's why most times in my signal group, I always tell them, I always ask them when they take trades, some of them, when they take trades, I always ask them, what inspired this trade? And then some of them will be like, oh, you posted in, and that's why we trade. That's why we decided to trade it. But I'm like, no, that's not how it's supposed to be. Don't just take trades because you saw that, oh, I dropped the signal. No, take out time, do your own analysis. That's why I always make sure that every Monday, of course, yesterday we didn't have a class for some reasons, but every Monday I always make sure to show up to teach them, because it's not just a signal group. It's not just a signal group. It is, as in, I want to see everybody grow. And they cannot grow if I'm not teaching. So most times that's because I'm always learning every day. So as I learn, I always like to impact people, right? So based on all the things I've been teaching, oh yeah, apply it and then support it with the signals that I sent. I don't subscribe to anybody taking my signals blindly. I don't subscribe to it at all. That's why I always make out time to teach them in there. Okay, so was it somebody's setup or is this your own setup or did you back it up with any analysis at all? Ask yourself that. It's not wrong to take people's signals, but back it up with your own analysis too. And this is where knowledge comes in. All right. Then another thing you do is ask yourself, am I overreacting? That after a loss, you ask yourself, oh, am I overreacting? If you're overreacting, this is where the mind exercises come in. Calm down, you calm down and then you take all the mind exercises to cool yourself down. And if you have to sleep, please do. Sometimes just one round of sleep will just calm you down automatically and make you um, and bring you back and make you be in check, so to say. All right. So now, if your answer to any of this is no, then do not trade. Okay. Don't trade further, right? Don't trade further. If possible, so take a break for like a week or so. Just take a break, right? So, and then of course, before you also enter a trade, you can also ask yourself this question: Am I calm? Is this my setup? Or am I overreacting to a previous loss? To a loss that you had in the past. And then after trading, still ask yourself this question: Was I calm when I traded? Was this my setup? Or if it was somebody else's signal, did I at least back it up with my own analysis? Then the last one is you ask yourself, oh, did I overreact? If you lost that trade, you ask yourself, oh, did I overreact to that trade? So these are the checklists you're supposed to take when either before or after your trades. All right. So now, in conclusion, revenge trading is a very, very, as in, is a trap. Is a deadly trap, right? And is one of the top three reasons that traders actually fail, right? And one thing about revenge trading is that it destroys your discipline, it destroys your capital, it destroys your mindset. Sometimes it can even lead to depression if you're not careful and if you don't take care of it early. Okay, so to succeed as a trader, you need to make sure that you treat trading as a business, all right? Treat trading as a business. Don't trade carelessly. Okay, don't trade carelessly. Trade with logic. Treat trading as a business, and you'll see that it's going to reward you. So basically, by treating in terms of treating trading as a business, Learn to manage your risks, learn to control your emotions. Very important. And always stay patient because, like I always tell people, trading is 80% psychological and 20% methodical. Now, methodical can be technical analysis, fundamental analysis, sentimental analysis, market forces, where you have supply and demand, as in all those things we're taught in uni, in economics. This is where we apply them. All right. So that, as in, that's just 20% of it. The 80% comes from your mind. That's why it's good that you do a lot of mind exercises. Exercise your mind frequently, because if you don't, you stand the risk of going mad at some point or losing your mind, because trading is a mentally draining business. So you need to be careful. You need to make sure that you exercise your mind frequently as you would your body. All right, so I'm going to stop this recording here and I'll take some questions if we have any. But if we don't, we'll just go straight to technical analysis. So to the coins that we are going to be trading.